Hello traders, this is Fawad Razak, market analyst for Citi Index. Today is the 12th of June 2024. So we've just seen the release of the US CPI, which came in weaker than expected across the board. As you can see, core CPI was 0.2% month over month. Actually, that was less than 0.2%. I think the exact figure was 0.16%. So it was rounded up to 0.2%, which was weaker than expected and also weaker than the previous reading. CPI was flat in terms of the headline figure, which was also weaker than expected, which meant that the year-over-year rate would decline to 3.3%. So the market's response to the CPI data was a swift one. We saw the dollar fall across the board. Equity indices rallied. Gold and silver bounced back. So yeah, it was a risk-on response in the immediate aftermath of the inflation data. Now, heading deeper into the US session, we have the Federal Reserve rate decision coming up. No changes are expected at this meeting, but in light of the weaker inflation data, the Fed could indicate that interest rates are going to be cut later this year, with the market now pricing in about 70% probability of that happening in September meeting. So let's see if the Fed will confirm that and how that might impact the markets. Now let's start by looking at a few major currency pairs. Starting with the euro dollar. First of all, the euro dollar has bounced back after selling off earlier this week on the back of the European elections, and it's now retesting the backside of the broken trend line where we have the 21-day exponential moving average converging as well. So today's rally is clearly a bullish sign, and if we see some weakness from around current levels, I'd expect support to come in around this shaded region where we have the 200-day moving average converging as well. Some of the other currency pairs are looking quite strong. For example, the New Zealand dollar, which has just broken above its previous resistance area around 62 or so. So, in fact, it hasn't cleanly broken out yet. I think the market is waiting for the FOMC to be out of the way, but it has tested this level a few times now. So a breakout should not come as major surprise if we see it. Likewise, the Aussie dollar has bounced back from support around 65.80-ish and is heading towards its most recent highs. So a bullish breakout could be on the cards for the Aussie as well. Keep an eye on these currency pairs as we move on to look at a few major commodities. Gold has been stuck inside a consolidation range between 2,277 to 2,450. It hasn't really moved significantly from this area, oscillating around the 21-day exponential moving average. It remains to be seen whether today's recovery can hold, and if it does, will it then trigger another potential rally? Well, that remains to be seen. I think given how the FX markets have reacted, I wouldn't be surprised if gold were to start trending higher from here. But we do need to see a close above 2,330 today, ideally above the 21-day exponential moving average as well to trigger a bullish breakout. On the downside, key support has been tested at around 2,300 on a number of occasions, and so far it has held. We need to see gold remain above this area to maintain the short-term bullish bias. In the long term, the trend is clearly bullish. As you can see on the weekly chart, for example, it has been trending higher for several weeks, and the pullback we've seen in recent weeks is merely a drop in the ocean compared to how much it has rallied. Now, silver is starting to look quite interesting. So it has pulled back in recent weeks to test the breakout area around $29 to $30 zone, where it had previously struggled before breaking out a couple of months ago. Now it is, in fact, it was last month in May that it broke out. So it's testing that area now as potential support. And previously I had indicated that we might see something like this on the lower time frames, a consolidation, a bullish consolidation before another breakout. That still remains the case, I think. So this is all, I think, consolidation. And for as long as we don't dip too much below that $30 level, I think the path of least resistance will remain to the upside. So zooming into the daily chart, you can see that we've broken above the highs of the previous 2 days ranges. So it remains to be seen if we can post a close above those highs. Now I think the market is waiting for the FOMC meeting to be out of the way before deciding its direction more decisively. For me, a close above the 21-day exponential moving average would be the trigger, because that would also push the metal on a daily closing basis back above that key support area, previous resistance that I highlighted on the monthly or weekly chart. That being said, it is possible that we could see a slightly deeper pullback in silver. 2870 is the point of origin of the previous breakout in mid-May. So ideally, you don't want silver to go back significantly below that level. So that's the next key support level to watch on the downside. Crude oil inventories data is going to be published soon. So by the time this video is up, we might see a completely different picture to what we are looking at right now. But WTI was testing at the time of recording 79, which is where we have the bearish trend line converging with price. And slightly ahead of that, we have the 200-day moving average at 79.55 area. So it's testing a very important technical area, and how prices close today's session could have major implications for the days ahead. A sharp rejection of this trend line and a bearish looking candle by the close of play today could point to further weakness. Whereas if we close above the trend line, then in all likelihood we could see oil continue its recovery and potentially take out the May high at 80.63 before potentially moving further higher. So today's close is going to be very important from a technical point of view. For more market insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.